Hi everyone, this is Dr. Ashutosh Singh, Consultant Financial Planner and Health Planner. Today I am going to talk about CIBIL, Credit Information Bureau of India Limited. It was founded in August 2000 as the credit rating agency, credit information agency. It is the Indian counterpart of US TransUnion, and now they have renamed it to TransUnion CIBIL. It collects and maintains records of payments of loans and credit cards as submitted by member banks and credit institutions. On this basis, credit information reports are created and credit scores are provided. This helps institutions to approve or to check loan applications and credit applications. The CIBIL score is used in loan approval process, which basically means to check the credit worthiness of an individual so that is he able to manage credit or additional credit, which is basically to check the repaying capacity of an individual. As of now, CIBIL has over 2,600 member institutions, which includes banks, non-banking finance companies, credit card companies, and other institutions which offer credit. So to give a brief history about CIBIL, CIBIL was first incorporated in August 2000, and then in 2004 Credit Bureau Services was launched, and then in 2006 Commercial Bureau operations were started. Thereafter, in 2007, CIBIL Score, India's first premier risk scoring model, was started. Thereafter, in 2010, CIBIL Detect and CIBIL Mortgage Check was introduced. CIBIL Detect is basically India's first repository for info on high-risk activity. So high-risk activity can be identified with that. And CIBIL Mortgage Check, India's first decentralized database on mortgages in India. So all over mortgages can be checked from this CIBIL Mortgage Check system. And then in 2011, CIBIL Score made available to individuals. So basically the CIBIL Score, credit score we are talking about, that's started from 2011. And then very recently in 2017, TransUnion CIBIL, CIBIL became TransUnion CIBIL. So TransUnion CIBIL launched CIBIL MSME. MSME is basically to rank and increase credit penetration in micro, small and medium enterprise, helping lenders across risk better. So as of now, the latest addition in this category is CIBIL MSME. So we look forward to more new additions in the future. Apart from CIBIL, there are 3 new additions in this category. So CIBIL is already there, it's the oldest one, so since it is it's being used very commonly. But we have Equifax, Experian and Highmark. The CIBIL score ranges from 300 to 900. So 900 being the best and 300 being the worst. Now, if a person hasn't taken any credit, like hasn't borrowed any money in his entire lifetime, then he will have a CIBIL score of -1. So basically -1 means the person has never borrowed credit. We have no idea how he will repay. If he gets credit, he will repay or not repay, or how he will behave in his repayment. We have no particular idea of that. Credit history of over 6 months, then you get a credit score of 0. So -1 gets removed and it becomes 0. Now it takes about approximately 18 months to 24 months to build your credit score. So let's say you start a credit from today, then after about 18 months to 24 months you will see your real score. Now as an average, 4 out of 5 loans in India, be it any kind of loan, personal loan, housing loan, business loan, whatever, 4 out of 5 loans are offered to individuals who have credit score of more than 750. So ideally speaking, above 750 is the best score. If you have a credit score better than 750, you can command the best terms and conditions on your borrowing. Now this credit score has basically two aspects. One is from the lender's perspective and one is from the borrower's perspective. So from the lender's perspective, it gives the lender, either the bank or non-bank finance companies or credit card institutions or housing finance companies, it gives them an idea of your repayment capacity or of your repayment habits, how you manage credit. The credit score gives them an understanding about how you have managed in the past. As it is said that past performance is an indication of future performance. So this gives them approximate understanding of how an individual will behave in the future. So based on that, they make their underwriting decisions on any loan application. From the individual borrower's perspective, it gives a better negotiating power. Like let's say a person has a credit score of over 750, he can negotiate with the lending institutions for better terms and conditions, better lower interest rates or whatever better terms available in that loan. And he can also prove that he has managed credit in the past, so in future he'll be able to handle credit in a much better way. A higher credit score actually makes the lender feel that this individual is perceived as a responsible borrower. See, if you have used credit cards or if you have applied for a loan and if you have taken a loan, you probably know how important is a CIBIL score. In fact, CIBIL score, the credit score is used for profiling of individuals. A good borrower, a bad borrower, worst borrower, or irresponsible borrower, or this person will take money and he'll never pay back, all kind of things. So this is basically a profiling of individual based on their repayment capacity or repayment habits, or repayment style. This credit report is accessed by lenders when there is any new application, new credit application, or there is an increase in credit. Let's say you have a credit card with X amount of limit, you want to increase your limit. The institution will do a credit check on you. So this is done very regularly. But individuals can also do a credit report check, so that way they can know where they stand. If there is any deficiency or any inadequacy, they can inform them and they can get it rectified. So having a correct credit score is much more important nowadays, because this directly impacts your future borrowing capacity. Even though you might have all explanations, but if the credit score is not showing what it should show, it will not help you get a better terms and conditions or a better interest rate on your loan. Now these credit reports are available at a cost, 550 rupees plus service tax. You can get it as many times you want, but once in a year you can get this credit report for free requirement. You give your identification, and then there are 3 to 5 your personal loan and credit related questions. Once that is done, that matches with their record, then they will provide you a free credit report. So you are eligible for one credit report once a year, one report a year free, and thereafter you have to purchase 550 plus service tax. Now, since credit score is the most important score you will ever remember or you will ever require, so I'll give you some points, some tips on how to improve your credit score, how to make it better. First important thing is, it cannot be improved overnight. It takes time. It's a gradual process. You cannot do it overnight. Pay your bills in time, as late payments affect your credit score. So if a bill is due on X day, make sure you pay either before X, either on X day or any day before that. Make sure your credit card balance is much lower, because a higher credit card balance makes the lender feel that you are unsecured financially. You are dependent on unsecured credit. Maintain a combination of credit card and loans, because only credit card is not a good thing to have. It's a higher interest rate also, and it shows a kind of desperation. If you are not using credit card, close it, cancel it, because having an unused credit card, available credit on a credit card, it doesn't reflect good on your credit score. For joint accounts, you have to keep a close watch, because the other person is defaulting on his payment or getting his payment delayed. That will affect your credit score also. So if you have a joint account, joint credit card or joint loan or anything joint, you make sure it is done properly, or you either, I wouldn't suggest to exit your joint account, but make sure the payment is done in time. It becomes your responsibility if you want your credit score to remain good. Don't become a guarantor for anyone's debt, because in the case of default, it will impact your credit score. So being a guarantor is basically you are assuming the liability of the other person. Do not inquire for too many credit at the same time, because too many credit applications gives an indication that you are desperate for loan, you are desperate for credit. So that again reduces your credit score. And make sure your monthly overall debt obligations is less than your monthly income. So if you are making X amount of money a month, then your overall debt, credit card and this and that and all together, your debt should be less than your monthly income. So that reflects better on your credit score. So these are the few points which I gave, which will help you improve your credit score. The objective is, overall logic is, try and achieve and get a credit score more than 750. Having a better credit score will put you in a commanding position when you are applying for a loan, be it a housing loan or a car loan or a business loan or any kind of loan. And nowadays the interest rates, we have MCLR, marginal cost of lending rate. So due to MCLR, if your credit score is good, you will get a better interest rate, and if your credit score is not good, you will be charged a higher interest rate. So it basically affects your future repayment obligations. Imagine, for a silly mistake, if your credit score goes less and you have to pay a higher interest rate just for that silly mistake. Does it make sense? I mean, it doesn't make sense at all. So why not maintain the credit score? Whatever points I have discussed, Go through them properly, and if you have any questions, give me a message. My Facebook page is there. Send me email. I'll link my email and Facebook in this, and my previous videos, I'll link them at the end. So do watch them. And if you have any queries or questions or concerns, please email me, and I'll be more than happy to help you out. Thank you.